In a world where hopium and common sense collide, starring the CryptoKeeper and BlockchainCrusader. Welcome to Debate Crypto.
Question everything, trust nothing. It's your boy BlockchainCrusader here, and we got the one, the only Gareth Holloway, Magic Internet Money, for another episode of Around the Charts here on TA Thursday, guys. The markets have been dumping. Bitcoin shit the bed, but I mean it wasn't Bitcoin's fault. FTX, they really screwed the pooch on this one, and that we got what we wanted. We wanted Bitcoin to make a move, whether it was to the upside, downside. We needed to know, and now we know it's to the downside. So, like I was telling Gareth behind the scenes, was now the question becomes, how low do we go, right? So we saw the CPI numbers came out today. It was 7.7 or 7 point whatever, lower than the 8.0 that was expected, which is good for the inflation sentiment, at least for the Federal Reserve. So that kind of level of bullishness really brought the market back up. So how are you guys feeling about that?
I'll let Magic go. Rocket, bro.
Right. You know what? You know me. I'm pretty steady on how I view the market. I thought today was a really good opportunity to take some trades if you were in traditional markets for sure. But it's coming right back into targets that we're looking at. You're still in a downtrend. You still can go up further from here and still be in a downtrend. Bear market rallies can go higher than people expect. They can also be quicker. So the real question to me is going to be what data we get towards the end of the year. I think that they want to see inflation being curbed over a period of time, not necessarily that first initial going, all right, inflation's tackled. I don't think that's the case. I think that we need a little bit more data there. But otherwise, yeah, the assets are trading well. They're trading technical as ever, which you love to see. So it's a trader's market still.
Yeah, perfect. How do you feel, Gareth?
Yeah, so I mean, I think looking at the chart, and I can pop up my chart real quick, but basically it was a scenario where the chart was telling us we were going to go down, right? You had this classic bearish channel going on here, especially off of this most recent dump in June. And so it was just a matter of when it was going to break down. And it's the amazing stuff about it is, the bearish chart, then, you don't know what it's going to be. In this case, it was this black swan event with FTX. But the problem here is that you now have a breakdown of kind of this trend line that marked the low pivots all across here. And so if we can't recapture it in the next day or two, I would be really concerned that this is the next wave of selling that takes us down 12, 13, 14,000 area. Now we got to 15 and change. I was a little surprised we didn't pierce 15. Sometimes they like to pierce those even numbers, trigger stops before a bounce. But I think the Fed kind of saved it. Well, not the Fed, the CPI number saved the day. It helped get bullish sentiment on there. The one thing I'd like to point out, though, is that even with Bitcoin's move, it still comparatively to the stock market didn't outperform that much. The NASDAQ was up 7% on the day. That happens once every 10 years in the NASDAQ. Today was not a once every 10 years type epic move up in crypto. So I think we have to also kind of take that into account. And there's just a lot of damage done in crypto. I mean, we thought we got through it with Terra Luna, and now you have another issue here where the mismanagement of client funds is involved. And it just begs to ask for, I hate to say this, but we need rules for crypto. We need transparency in these companies. Otherwise, I fear that, and again, I wonder how many more things out there are going on that we aren't aware of. And I think as the market goes lower, and I do expect it to overall go lower, I think we're going to see it. The one thing I think is the coolest thing, I got to show this because this is just mind-blowing stuff. So let's go back to, I'm going to take you guys all the way back on my chart to 2018, right? So here we go. All right. So basically look at this low here, which was the beginning of this quiet period, right? This low began in basically, well, really it's over here in June, right? So here was your low. You got this bounce, a little bit of chop, and then it went to sleep. And remember, crypto went to sleep over the last like 2 weeks. It was super, even 3 weeks, it was super, super quiet. And then look at what happened in 2018. You had this dump, kind of pause, and then this is basically where the final flush came in. We lost 50% on Bitcoin. Okay. So again, remember June, and where did the dump start? In November. All right. Now let's spin ahead here to the current price action. And what we can see is In June, again, just in 2022, that's when the low was put in. You got kind of those same early bounces here, and then we went to sleep, and then we dumped out. So it's amazing. June to November in 2018, and then the dump. June to November in this 6th segment, and then the dump. And again, I wonder if this is kind of that final move lower that could take us down 50%, like in 2018, which would basically put Bitcoin around 10,000, would maybe mark a low pivot. So just kind of some cool stuff there.
Yeah, that definitely reminds me at this moment right now, November time, having this dump down to the lower levels reminds me of the Bitcoin hash wars in 2018, which caused Bitcoin to break its support of like 7,000, 6,000, and it dropped all the way to 3,200 area, so forth. So do you guys think that with this problem with FTX, right? Obviously, the White House came out today talking about how they need some strong regulations to protect customers, to protect users. No matter what side we fall on that, do you guys think that this FTX problem and that has caused this dump, would this extend the bear market, or does this still same timeline? The bear market will still be as long as it needs to be, right? And it doesn't really extend that, or does it extend the bear market? Any of you guys can take it first.
I don't necessarily think it's going to extend it. I think the bear market's going to be what it's going to be. I think that, regulation can do some damage to the space, but I think ultimately it'll be good. When I say damage, I mean like there's 2,000 plus coins or however many there are now. Vaporware,
like
scams, Ponzi's, whatever you want to call them. And something does have to be done about that. This is just basically an unregulated casino to some degree, where people are just going in. There's no clocks here. The lights are on full blast, and you can't bring your phone in so people can get you out. They're just in here, anyone can put something on the internet, any kind of blockchain now, create their own coin, and people will literally flock to it and put their money in it. They have to do something about that, because ultimately it's a really bad thing for the everyday person. Some people are going to make out like bandits. Some aren't. I think that when they do regulate it, that's probably when you'll get closer to the lows. But regulation brings in things like more money into Bitcoin over time, in my opinion, into the strong assets that actually have use case and value. Those will be, those will be the ones you want to be holding, I guess. It's just part of a growing asset class. This is something that has to be done. So I don't think it necessarily extends it out, but I don't think that, you should overlook it when it comes. It really just depends on if they can get anything done, because now that, with our government, who knows how long that'll take.
Yeah, no, I 100% agree. And I for the last year plus, I've been saying we need regulation. And I know that's kind of like taboo in the crypto markets, but like Magic said, if we want big money to get involved, and you want Bitcoin to go to 100,000 to 500,000, you have to get big money involved. And again, these funds, these pension funds, all these things, they have this fiduciary responsibility to only invest in things where they do their due diligence, they can quantify the risk. And when you don't have transparency and like anything like that, they just can't do it. And if you got these big players involved, Bitcoin would soar. I mean, just imagine them putting like 1% of all their assets and, trillions of dollars into Bitcoin, and we're all rich, right? So, I mean, some people look at it as as like, oh, don't get involved. We don't want regulation. We don't want the government to control it. I'm from the investor side, right? I've always been a trader and investor in my life. I'm like, I kind of want to know if something's a fraud so I don't lose all my money, right? I mean, like, let's do this. Let's get it in there so we can all make money on the way up. And I think that's what we need. And I agree that the low will be probably put in right around when that regulation comes out.
Yeah, regulation is definitely important. I think the big pause on that, where people are so hesitant on a regulation, especially me, is the fact that it's more likely they're going to get bad regulation than good regulation, right? Like we've heard about the bit license and all these licensing deals that they have to do. That would kind of destroy the decentralized market of exchanges, and it would make it a lot more regulated, a lot more complicated, take away a lot more privacy. You saw that came out after Tornado Cash. It has its good and its bad. So I'm just afraid that they will over-regulate and really kill off the ethos of crypto. Yes, we'll have big money coming in and Bitcoin to the moon, but at the same time, you'll be kind of killing the crypto revolution, as I see. But I agree. The right regulation needs to be put in place so that it benefits everybody and it's still innovative for the space and protects people at the same time.
And I think you're 100% right. Like, I mean, historically, great ideas start under the best of intentions, right? And then over time,
Yeah.
regulation or big money comes in and kind of screws it up. And I hate to say it, but it's probably going to be the way crypto goes. The only positive is if we're smart and we accumulate down here, and if it does happen to go lower, we can all go for that ride and make a ton of money along the way. But I have no doubt that, when has the government actually done anything that's been great, right? I mean, it just doesn't happen anymore.
Yeah.
So
Yeah.
Yeah.
That's
So
kind of my take on it too.
So yeah, let's start pulling out those Bitcoin charts and how
got you.
much lower are we going, right? The little bit of TA that I know, right, that I've learned from you guys in leading crypto, right? I did some quarterly pivots. I've seen the support. We broke below the 16,000 support
Yeah.
line, 16,500, and I see that the next line is like 13,800.
Yeah. So
what's happening?
This is a chart that I'm going to bring up just because it's a very high time frame chart, and I think people will appreciate that just because, it kind of puts things in perspective in terms of what you could be looking for. As you know, we've been working off of some pivots, right? And inside of that, we're working off of a trend. So this is your new trend on the weekly, which is, down from your old trend. You're just looking for the appropriate trend. This was good. You lose this back test. Now we're looking for a broader trend. You have this one here. And again, when we're talking timing, we've been talking about November 7th for how long, guys? For about 4 months. November 7th was the day. That was the day that I ended up taking a substantial short again from this level. I just wish I hadn't closed it and just kept hanging on to it. But the 40K short is still running, so that one's good. But just looking at timing, we've been discussing that Q4 is going to be the time frame. You know me, I hate being that guy and saying I'm super neutral because I subscribe to the theory that we don't know anything in the markets. I think that's the best way to go about it. What you can see is that you rode this EQ of your trend all the way until you broke, and now you're targeting the 1-to-1 right here, coming in at 10,954. It's also your local gold pocket. 13,880 is on my list of areas to look at. That's a really nice support, I think. I think ultimately, though, you're probably going to pierce into this level. And I think that 9,200, even down as low as 7,500 is on the table at that point.
Ay.
The problem with that is you're looking at this in terms of a really broad range, in my opinion. So it's impossible to nail the low. And if you do, it's not, I wouldn't say it's dumb luck, but there's a factor of, hey, you did your homework, but getting the exact low is difficult. It's one of those things where you just want to get in the nice region of it. But the reason I bring up piercing this and going down to like 7,500, for instance, right? The reason that's important is if you start closing back below, and if we put 10K on the chart, 10,500 specifically, right? We'll put that on the chart and we'll take a look at it. You start living back below this prior range support, which was high time frame resistance, flipped into support right here, and off it goes, right? You really don't want to be losing that. If you lose that, I think that, I know Garrett's mentioned it as well. There are targets at like 3K from some people. I think that's getting a little ahead of ourselves as of right now, but you do have to understand how that type of target comes to fruition and what the implications of that are. And I think if we got that low, that I'm not saying crypto is dead by any means, but I think the market at that time is going to need years and years and years to recover. And that would also be traditional markets as well. And to the flip side of this, man, I mean, like I said, I always remain neutral. As Gareth was indicating, we can't really spend more than a few days down here not recovering any ground. For me, if you're just looking at this on like a weekly closing basis, right? You've got 17,592 on Bitstamp. It's 17,567 on Bybit. You have to start closing weeklies, and that has to transpire into monthly candle closures above these levels, holding them as support, showing that there is a failure to push lower, meaning that sellers are actually exhausted, right? If you don't see that in price, to me, it's really foolish just to be calling a bottom to call a bottom, which people have been doing for the last year. So that's how I'm viewing the chart, fairly neutral, keeping it fairly high time frame for that type of stuff. But to Gareth's point as well, you did something very similar in 2018 where you kind of dilly-dallied around here and dumped. You also did it right here. When you broke down from this head and shoulders, you pretty much hung out for a few days. People were taking longs again. And then on like the fourth day, it just absolutely nukes because you're not reclaiming any bullish ground at all. So I think I share the same opinion as him. No matter how you draw it up, you have to get back above this level and be living back in this range.
You gotta get above what level again? What's the exact price?
17,592 here. If you were looking for an exact level, like in terms of like if it was like an impulsive move, like, and I mean like a quick one, Like, let's say it doesn't wait for you to get that, weekly closure or monthly closure. When should you get excited about price again? So if you guys remember, the TPO point of control was at 19,150. Now your 40 tick volume POC comes in there as well. That's also your October NPO or October POC. It's no longer naked. And you have a nice monthly level at 19,411 and your golden pocket from high to low, right? So if I was looking for a region that I had to get back above, this is going to be it. Your volume point of control on the 40 tick is there. Your time point of control is there. And this was the level, if you remember when we were up here, I said, if we lose 20K, you're probably going to 19,150. And if you lose that, like, all bets are off. And you're heading up or you're heading down. So if you get back above this, I wouldn't say all bets are off for more downside, but I would say be wary of the next zone up here. But holding this as support again on material closing basis would actually look good. The only issue with this low that came in is that I have exo charts up. I actually need this one, single prints. The only issue with this is you don't really have a good low. So if you remember back when I was talking about the $32,000 low that we put in, oh man, when was that? Like January? That was actually classified as what's called a weak low. And we have another weak low at the bottom. Now you have a really nice low from yesterday. This session is actually a fairly bullish session. However, it's the overall low that matters. And this being a weak, poor, or, for lack of a better term, let's call it weak low, it does carry an over 80% chance of being taken again. Now, that doesn't mean you're going to nuke to 13K, but it does imply that we're going to revisit this area. And if we are going to put in a formal low here, it's probably going to take that low and trap some people down beneath it, like a swing failure pattern, things like that. That would be the only trade available in that instance. But yeah, you are looking at this, and then you've got very clear levels to the downside right now, like 16,922 to 17,026. That little $100 pocket is a single print that was actually defended earlier to the T. So if you come over here, you'll see that you were coming down defended to the T. What do we know about single prints? If you guys have been watching the show, once you identify them, they're actually for trend continuation. So if they are lost, the trend is usually weakening. You're probably giving up session points of control as well. In this case, you're coming back, you're defending it, you've made a new high, and you're making a higher low. However, if you lose this, these guys that are entering long up here are going to be underwater, and the odds of you not coming back down to at least 15.8, and then maybe even the overall low, which is marked as the previous day low here, are probably not so good. I would expect to see that low taken. So, yeah, that's how I'm viewing price in a nutshell. It's very,
Awesome.
very technical as always. It's, we trade the charts, not the news. And, we had a short setup for FTT before we even knew that they were going under. Yeah, it was one of those things where it had a giant descending triangle. CVO had called it out. He gave the target of $4. A guy in our group did take it from 22. He made 11,500% on that trade. And wow. I was like, yeah, dude, banger. I was like, dude, you're king of the day, king of the week for right now, man. I'm surprised he was able to get out, though, because I was like, how do you even get out of that? Who's buying this? How do you close that position?
Yeah, that thing's going to zero for sure, dude. It is crazy. So you're pretty much saying 13,000. Then from there, you're kind of heading to that 900K area. And if we break below that, 700 and 7,500. Yep. So
I would say, 13,880 is the next major area. Then I'm with Gareth in the camp of 10K, but I think there's a chance you head down to like the 7,500 on a wick. 9,200 is the overall POC of that area and structure. I think that's a nice area. Log scale gold pocket there, 1-to-1, all that stuff. So again, it's a zone. None of us know. We're all just doing the best we can to prepare ourselves for the events when they occur, and then have a plan either way.
Yeah, I just want to say, hey, Kareem, thank you for the super chat. Greatly appreciate it. Can't promise we'll get around to Raven Coin, but thank you for the super chat. And guys, smash the likes if you haven't smashed the likes. Go follow these guys if you haven't been following them on their socials. Their links are down below. Go follow them on YouTube, Twitter. These guys are coming here every Thursday to bring you amazing information, and especially now in a time of such fear, right? Where they're bringing you clear, precise levels to get the emotion away, so you guys can have some good information. So make sure you guys are following them on their socials. Gareth, what are you seeing for Bitcoin, man?
Yeah, so I definitely agree with a lot of what Magic said, right? So let's bring up the chart here and take a look. And basically what we see is again, you broke this lower thing, and like he said, and like we talked about earlier, you have to recapture this area here. I really want to see it like a weekly close back above the low from June, which was around 17,600, give or take a little bit. My guess is it's not going to do it, just based on what we're seeing in the crypto sector. And again, I think there are more black swan events out there that will likely come to light, and it's going to freak people out. It makes them very cautious about buying down here. Having said that, I think for me, again, the 13,000 area here, if I put in a trend line, I'll show you guys what I'm looking at. So I think this is your next major support area right in here. And you can see it's this pivot high, and then there's this little blip right over here as well. And before it broke out, and that was really the breakout that started around 12.5, is what took us all the way up to that 65,000 on that first high up. Now, one of the things I liked that Magic said was that basically you can see here, if you go back to 2017 before that run, and you take a line and you connect it through the lows in 2018, so the cycle lows prior to the 2017 point, the aftermarket lows from 2018 after that cycle high, it connects right through the COVID low right here, and that gives us right around 8,000, 7,800, kind of right around that 7,500 level. So I do think if 12 and 13 area breaks, that's your next likely target. And it makes a lot of sense considering the uncertainty in crypto, the fact that, I mean, you look at the stock market, and I really tie crypto in with the stock market a lot because it's a fear factor, right? So if the stock market goes lower, and I do believe it will go lower in 2023, it's likely to take crypto down. And I think we have to always remember that, you know, this is the first cycle with no Federal Reserve stimulus, and at least for now. And even if they pause hiking rates, they're not going to go to lowering rates until inflation is substantially lower or the economy is essentially in a depression and they have no other choice. And so what that does is it potentially prolongs the bear market longer than previous bear markets, which were like 12, 18 months. And I think, again, we could be in a 2-year plus bear market before we finally get those lows. On the positive side, I'm just looking to accumulate Bitcoin. I'm really not going to any of the alts. Maybe Ethereum, I'll kind of hodl a little bit, but we know that Bitcoin is that commodity per Gary Gensler, so it kind of gives me a little clarity on the regulation for that. And I guess I just want to stay with best of breed at this point. So as it comes lower, I'm just basically putting a little bit of money to work every $2,500, $3,000 lows from this point on. And I'm just going to kind of tuck that away, as I do think we will eventually get that bull run. I do think Bitcoin eventually becomes more of a gold scenario where it does well in uncertainty, and the scarcity aspect, I think, does really, really help.
Awesome, dude. Appreciate it. Yeah, my daughter is not excited about the state of the Bitcoin market right now, as you guys can hear. But before we move on to ETH, I want to remind everybody to smash the likes if you haven't smashed the likes, and we're gonna be giving away 5 ETH, right? I don't want to actually. I'm gonna correct myself. I'm not gonna say giveaway. We're doing a competition in our Discord within our Danger Close Alpha NFT project, right? Everybody is splitting up into factions, and they're going to be in a competition for 4 weeks, and one faction is going to be the winner. Within that one faction, one person is going to be eligible to take 5 ETH home. So right now, a few days ago, it was over $7,000. Clearly, that's dropped since then, but it's still a nice amount of ETH to be collected in a time like this. So if you're trying to look into doing some trading, small risk, just join the Discord, get involved, and you can take 5 ETH home, guys. So hopefully you guys jump into the Discord, get involved with Danger Close Alpha. We're trying to help you guys out and, just have fun in there. But so now we're talking about ETH, right? ETH, Magic, I saw you guys were mentioning that Bitcoin was breaking the June lows and Ethereum still hasn't. Has it already crossed the June lows, or are we where is ETH at right now? And why is it looking so different than Bitcoin?
ETH had a much better rally off the low, in my opinion, when it came down to like that 17.5 low. If I remember, ETH almost like 100% gain, or a little over, actually. Let me get my ETH chart up. So these are the same levels we've been working off of, man. It's I know I get tired of saying that, but we've been in a range for so long, you're going to say that often. So yeah, but it's always good to make sure that we have a good head on our shoulders here. So if you recall, we were looking at this move off of the POC here of this old like consolidation low. And we were saying, looking for right around like 1,600 and some change, local gold pocket, filling that Q3 in POC. And I was pretty explicit about it. I said, I'm not really interested in putting any more risk into ETH here. If I take that trade, it's going to be more for like a day trade. I'm not looking to hold on to it. Main reason being is you did have some session naked pointy controls beneath us at the Q3 open and an untapped daily down here at 1036. So this is, for the foreseeable, this is your range low for Ethereum. So Ethereum is not broke down yet, which is, you could call that relative strength. I mean, it's a very strong asset in this market in terms of crypto, even though it's down just like any other one. The thing about Ethereum is if you break through these levels, and I think that's, they're really big levels right now to be contending with. Like this is a quarterly level. If we got to the quarterly chart, that blue line you guys see there, I believe it's blue, is the Q3 open. And so what you've done is you've established a really nice buying tail here, and you're actually trapping traders below here that were shorting. So now you're seeing it come back test that. And the reason you get a reaction like this is because you now have people that are allowed to get out of their positions that might be able to get out close to break even. It's also just technical support. So you're seeing demand come in there. So you're seeing interactions from new buyers. You're seeing interaction from old sellers that are now able to buy back those positions. Not necessarily an increase in open interest there, but it is a market buy into the market. And then you're going to see people that are shorting into this to fill those positions, because that's what people do, is they short support. So you are seeing a good reaction out of Ethereum. And I did look at the low on Ethereum, and it looks much better than Bitcoin's. So I will say that. So maybe Ethereum is leading a little bit if we were to get an actual low, but until we see any kind of, reclaim, just like Gareth was saying, I don't think we could get that far ahead of ourselves. But the reason it's important to hold these is we talked about the devil's basement back in June. You start losing this, your first targets are going to be the 2021 low right around $715.80. You have an NPOC at 730. So the drop is going to get underway pretty quick if that happens. So I think that you're probably looking more so down to the $500 range, 528 specifically. Yeah, 528 specifically, but that's only if the support goes. And we've been saying that, support is support until it's not. What you want to be doing is you want to be looking at Bitcoin as it's coming into support or finding its way like a leg up. And you want to see these also at support. And, if you're trading USD pairs or USDT, that's when you can get involved in the move. If you're looking for altcoins, I'm in the same camp as Gareth, though, with altcoins. I'll be upfront with you guys. I'll trade a few of them if the setup is there, but I'm not really looking to accumulate anything just yet. I've already kind of allocated that risk for that section. But until we see a clear directional change on Bitcoin, I don't think it's wise to be putting a lot of my money into some assets that are going to move in greater percentages to the downside or even the upside later. So that's how I'm looking at ETH.
Wow. So if we lose 1,000, it's like 1,000 something, right? We're
about 1,000. I'll show you here. We have the old chart up. It's on the USDT chart. So I can't pull single prints and TPO on USD because it's just not available. However, on USDT, it is available through ATAS. So I was able to get Binance's chart because it's got a lot of history. And so what you had here was a single print. I had identified this coming into the low. This was a single print that we had put in right here on a trend, basically defense right here. And now we've got this single print at the low. And you've come back, you've bounced off of it. It's been defended. If you revisit this low, this box right here, you're not wanting to see this loss, and that's at 915 to 987. So for all intents and purposes, $1,000 or so gets lost. I think you've got a quick trip down to close out that single print at $760 is where it closes, meaning that once this open is claimed on like a move down, that's when you will see, I wouldn't say a melt, but it's going to be a quick move, because you go up fast, guys, you will come down fast. That's why these single prints, when they're formed, get defended, because the people that are moving the market makers or buyers, have to defend those levels. Otherwise, the move will retrace and the trend changes. So that's why you see a single print form, and that's why you see it defended in strong trends. Just like with Bitcoin, we talked about earlier. What do we want to see? We want to see the single print defended, and that's what you've been seeing. So the moment you lose that, this little local trend is over. Much lower time frame, obviously, than Ethereum here, as this is a merged range. But yeah, I mean, that's it. Same as always. And I think the key for Ethereum, if we're just looking at levels, is 1418. It's a merged value area low from prior ranges that I've had on my chart for a while. It's also the previous all-time high. So you've got like confluence with it there. It makes sense. I think if you get back above like 1418, you can start talking about maybe even challenging into these highs. But I don't want to get too far ahead of ourselves, just because You know,
Yeah, that's
it's
wild, dude.
but it's always fun to be aware of. You know, I mean, the trades are there if people want to take them. The question is, what is your risk tolerance? You know,
Yeah.
and what's your stomach and gut like? I don't get into that stuff. I think that's really important, and I know Gareth will agree. Is have a plan, but also know when not to just be trading to trade. Like just because it's there doesn't mean you should put your money in it. You know, it's okay to sit on your hands a little bit.
For sure, dude. I mean, sometimes the market is just so uncertain that it's not worth the risk, right? Um, but Gareth, how are you feeling about Ethereum?
Yeah, so just to agree with what Magic said is, never trade just to trade, right? There's this junkie mentality where you get this emotional kind of high by getting in a trade, and you're just so it's a gambler's mentality, right? And I think Magic would agree is that if you're trading right, you're not gambling. All right, doesn't mean you're going to win 100% of the time, but you're at least putting the odds in your favor versus gambling, as we know, is 50-50 at best, most likely less than that. So I think that's a super important thing. I mean, in the trading room where I do mostly stocks, like literally we'll maybe average one trade a day, but we win 80-90% of the time, right? So it's a matter of sometimes we sit on our hands and do no trades for like 2-3 days, and newbies come in, they're like, what the heck are you doing? And it's important to recognize that the market tells you when to trade. You don't tell the market when to trade, right? And it's you as soon as you start telling the market when you're going to trade, you're going to lose. And it's just that simple. So going to Ethereum, let's take a look here. And again, for me, we had this wedge pattern, and basically the wedge pattern broke. Again, when you break a level, there's always a period of time where it can technically recapture, but that time is ticking away. It's like a stop clock, right? And so you can see right here, we broke below, we bounced back, but look right away, the high from today/yesterday, since we just started the new candle, was right there, and it couldn't get through. So can it do that in the next 24 hours? That would be important if it could recapture this upsloping trend line. If not, I think you're going to start heading down, and then you start attacking this kind of low pivot from June, which was around $900 or so. That'll be your next key level. And if that breaks, if Bitcoin really starts to collapse, if there's more of these kind of shady practices being done with other coins, then you're really talking about heading down to where the bull market began in 2020, where you're going down to that 600 level, 700 level, maybe even a little bit lower down to 5 or 4. Again, for me, I do like Ethereum longer term. I think it has a ton of use case. So I think as you get down, you just, you patiently wait, let the levels hit, and then think about nibbling a little bit. But when I say nibbling a little, it's important to recognize that, and I'm sure Magic would agree with this, is that, there's plenty of levels I bought that I thought were going to be great levels, and the market said nope, and it went right through. And so by nibbling, you give yourself that opportunity to trade around the position a little bit, right? So I always think about, do I want to put a quarter of what I want in, a fifth, a fourth, third, and then I give myself that ability. Once you commit all your capital, there's no trading around that position. You're done. You're just riding that. And so as a good trader, you want to always be able to maneuver. I look at technical levels and I say to myself, okay, there's a 70% chance of a bounce here, so I'm going to commit X amount of capital. That means 30% chance it's going to break. So then I look for the next level. If it breaks, I buy more there. And ultimately, when you have 70% odds, maybe not the first time, but the second time you should get that technical bounce. At one of those times you will, and you can ultimately at least make a small amount on the trade. So the trading psychology is important. One of the things I love talking about is the discipline. The mental discipline of a trader is so important. And then understanding the psychology of market, to understand greed and fear, and how to not get swept up in greed and fear, but also how to use it to your advantage, right? So when you see this kind of blood in the streets, people panicking, and you're starting to hit major technical levels, that's where you start to nibble with the technicals and the psychology of the market. So just kind of cool stuff, across the board.
Yeah, dude, 100% agree with that. I mean, it's just people, you got to be careful, right? You got to be understanding and have a plan of when to get in, but you also can't be terrified that you don't ever get in, right? And then you just sit around and you miss everything because you're just so terrified. You just have the mentality of it's only going to go lower. It's only going to go lower. I'll keep waiting. So like you said, right, take little pieces, little nibbles, and slowly get a position and feel it out how it goes and pivot as you need to. So you guys both have mentioned, right, these way lower levels, right, over less than 10,000, less than $500 ETH, $700 ETH. If we do go to those levels, it was also mentioned, right, that we could be there for a lot longer. How do you guys see that playing out? How do you guys see those lower levels and the bear market like being at that time? Like, is it really going to be a 2-year bear market where we're not going to see any, I'm not going to say we're not going to see any upside, right? There's always little rallies or whatever, but are we really going to be hyper extended into a bear market all the way to the next Bitcoin halving or even past that? How do you guys see that playing out at those really low levels?
Well, I mean, I really hope not. It's as much as I enjoy making money on the way down, it's much more fun when it's going up because everybody's happier. Everybody in the space is much more polite to each other. But yeah, I mean, so for me, if it goes down to like the levels that we were discussing, 10, 12, 13K, I think that that's kind of the expectation of the retracement for this asset class. I don't think anything's broken. I think you get just a normal cycle there.
Yeah.
However, I think if you start piercing that and living down there, yeah, you could spend a couple years down there and you may go a halving cycle without making an all-time high even. You may you'll have some big retracements. Don't get me wrong. The retrace on that's going to be great. Just like we saw, what was it, 3K to 14K back in 2018. You'll see something like that, except I think it'll be extended out in time. But we don't really know. We're all kind of just guessing and preparing and doing our best to make sure that we're putting ourselves in position that if that did occur, we're not out of position, so to speak, that we're not getting, we're not ending up like everyone else, I guess, and getting hurt by it. But you can only mitigate so much risk. And so kind of what he was talking about earlier, you have to be able to take the trades. Same with you. Mentality is a really big deal. So I'm still looking for those lower levels until something, tells me otherwise. And if they come and we get that bear market, I'm going to find the range in the bear market and I'm going to trade that range too. And I'll look to accumulate. Don't get me wrong. Like kind of what Gareth was saying, like I believe it or not, I'm not just a degenerate 1-minute scalper. I do have 80% of my capital is long-term investments. I don't put everything like that into a day trading portfolio or even a swing trading portfolio. It's just a bad idea. You have to be able to separate those two things. And I just like him, I was buying some. I was open about it on your show. I was like 18,246, 18,880, sub 19K Bitcoin is where I will accumulate 4 positions out of the 22 allocations that I've made. So I've done that. That Bitcoin I pull. Normally I would hedge it short because I don't like to take the drawdown. I got a little bit of an ego there, but with everything going on with exchanges, I did take it off exchange. So I'm not willing to leave anything that I'm not going to be actively using on exchanges right now. With everything that's going on, I trust the one that we use at Bybit because they do one-to-one reserves. They don't do this other stuff. However, we only know what they're telling us, and we know from FTX and a few others that doesn't really mean much anymore. It doesn't, we're taking guys on the internet's word for it in an unregulated market. So you reap what you sow, kind of in that case, unfortunately. But yeah, that's how I view it. If we go sub 10K, then it can't live there. If it lives there, I think you might have a problem. And when I say live there, I mean like more than like 3-4 months. Okay.
So you're saying that if we visit those levels kind of a quick, maybe a few days or anything, quick little wick, and we come back up, then we're still okay in the
You just want to see like a trend change, at least on a daily. Yeah. I mean, like when's the last time we had like a real daily trend change, like where you got back into an old range? You want to see something productive. It doesn't have to just rocket back up, but it does need to defend the lows, put in some market structure, it show that there are buyers there that are willing to put up or shut up, so to speak, and that there's demand for the class. I guess I should say there's demand there. And if that's the case, then yeah, you'll get yourself a nice low, and it takes time, but we don't really know. I mean, like it's this thing is all we're doing is we're just trying to prepare you guys with the information that we see that could happen, like there's all kinds of scenarios. Like everyone that's been talking about the 2019 fractal, and I think Gareth would appreciate this. Fractals are interesting to me. I don't really think that fractals are all that important in trading. I actually think people should shy away from them because they start marrying ideas and thinking that they're predicting the future with past results, which is not a good idea. However, if you start seeing something like this, because you did just have a massive descending triangle here, also another massive one over here. This is just a big descending triangle, right? If you fail to break down and you fail to break back in and you go sideways for a month like you did here, if you go to the monthly chart, so we were just talking about monthly highs and lows of this chart, right? So this is your monthly low right here before the breakdown. Obviously, this month is very green because it went straight up. But this is your last monthly low that you were defending before you broke down, closed below it, and then rocketed back up. If you put that on the chart now and you look at it, you can use it as an area of like reference, so that when you're saying, okay, well, where do I draw the line? All right, well, if I'm below 76.90 right here, that is bad. What happened? You deviated it. You had massive divergences on all oscillators, volume, everything. And you got to move back into fill and NPOC, which was the Q3, which was just a massive resistance for several years. Then you came back down to it, resistance, resistance, resistance. So you're just using high time frames to dictate what you're going to be thinking on the low to medium to high, because they all bleed in together eventually. It's just, your ability to take that information and make it actionable for yourself. So as soon as you're back above this, you're thinking, okay, if I'm back above this, I'm now targeting again range low. So first target's 9,300. After that, I'm looking back to 10,300-ish, give or take. And then same for the vice versa. You lose the range low. You're coming back to where? Our monthly low that we were defending. What happened when you lost it? Clown town, right? So very, very simple. And the same can be done with the same level that Gareth was pointing out. I've been pointing out. It's the range low at 17.5. If you got that scenario where you went sideways for a month, failed to make new lows, that could be one of those instances where you can start saying, oh man, this is starting to look a little different. But again, we don't have that information. So it's one of those things where you have to kind of like be malleable in this environment, because none of us truly know where it's going to go or how low. And as Gareth has said, he's like, I just nibble at it because he's done a good job with, money management. And that's a big part of it in investing. That'll keep you sane as well. Because once you're overexposed in a market, the psychology and your ability to make rational decisions is pretty much gone. No matter what you think, it's gone. If you're all in, man, it's you're checking your phone in the middle of the night probably.
Hey, waking up multiple times. Yeah,
yeah,
dude. Let me tell you, in 2018, I've said this before, but in 2018, I first got into crypto. I got in with a $16,000 loan, and I started buying Bitcoin at 9,000 something, right? I was like, oh yeah, we've got like a 50% retracement where I'm solid. This ain't gonna go much lower. Let me tell you, for that first year, I couldn't sleep, right? I started to get grazed. I was sweating. I was checking my phone every 5 minutes, and it took me a long time to get past that, right? And get comfortable being underwater for such a long time, on top of paying a loan for that money. So definitely mistakes that I've learned from, right? And definitely things that people need to watch out for and not repeat now.
Everybody does it, man. I lost 60% of my entire net worth when I started trading, because I found out what leverage was, and I thought I was a genius in 2018. And that was, that was when I didn't lose it all, but 60% of your net worth is a lot. And I was making, 6+ figures a year at that time in sales. And so it was one of those things where I had a lot to lose for what little I'd already made, and that really had to make me take a step back. And I was like, okay, how does the math add up? The math doesn't add up. Like, I have to figure that out. And that's really what trading is. You were talking about earlier, gambling and stuff, position sizing, risk management, understanding what risk percentage is and how to like make the odds work for you. Like, if I only win 50% of my trades, it means I can only afford to take this many trades with this amount of risk. It's going to be different for everyone, because everyone's going to have a different risk tolerance, in the sense that they're going to have different win rates. So
I was just going to say, one of the things I always say is, like, if you're a real, like, there's some people out in the crypto world who, they're cocky, they're all this stuff. And I always say is that a real trader is never cocky, because we've all gone through the market punishing us. And as soon as, you think you've got the answer and you've gotten beyond it, you get punished again. And it's very humbling. Like, this game is unbelievably humbling. I mean, I just, for me in my early career, I had just gotten to 100K in my trading account, which was basically at that time all my money. And then in one day, 70,000 was gone, because I kept on going in, thinking it was going to bounce, thinking this was a stock at the time. And it just never bounced. And at one point I was in day trading, you got 4 times. And by the end of the day, I had $30,000 left. And just like that, wiped out all that work of months and months and months. And it's a humbling game. So you learn from it. But even to this day, there are trades where I get in and it just doesn't do what I think it's going to do. And the only difference now is that, I'm smart enough to not over allocate, right? It's money management is everything, but it's still humbling. It still makes you say, wow, like, yes, I win most of the time, but as soon as I get cocky, I'm going to get smoked.
I always tell
For
people
sure,
the
dude.
worst thing that you can do is be a new trader on a winning streak.
Yeah.
Because a new trader on a winning streak thinks they know a little too much, and eventually it's like you said, the market. I think Jesse Livermore said it best that there are no bears or bulls in the market. There's only the right side of the market, and that's I put it on Twitter because right now everyone's at each other's throats. I don't know what your timeline looks like, but with everything going on, people are oh, you were bullish, you were an idiot, blah blah, because it dumped. And it's like, come on, man, like. Nobody cares. Like bears are going to get punished. Bulls are going to get punished. If you're perma bull, perma bear, you're both going to get washed out eventually. You have to be, what did Bruce Lee say? You got to be like water. It's one of those things where you got to be able to adjust and take your lumps because you're going to lose trades. Like I always tell people, they're like, I got people in my group, they'll take a trade and like, what did I do wrong? And I'm like, the trade was good. You're going to lose trades. That's part of the stats, like it's going to happen.
Yeah,
it's
no,
impossible to avoid.
And you brought up, Magic, you brought up a great, Jesse Livermore. And for those out there that are watching, there's a book called Reminiscences of a Stock Operator, I think. Yep. It's the story of Jesse Livermore. And it's fascinating because, number one, he made more money than, like, if you did it in today's dollars, this was in, like, the 29, the 30s and so forth. He would have been more wealthy than Elon Musk. He literally had the government in the Great Depression coming to him and begging him to cover his shorts because, they needed the market to bounce at that point. But the crazy thing about it is he still had an ego and he still couldn't admit, and he still over leveraged himself to the point where at the end of his life, he committed suicide because he was broke. He blew everything up and he ended up just checking out.
That was like in a closet at a hotel or something, wasn't it?
Yeah, it's a powerful story about how a trader, you have to learn from your errors and you have to be careful.
Wow, that is wild. I didn't know that story. I didn't know that at all.
Oh,
that
dude.
is a crazy
If you don't know about Livermore, you should definitely look into it. It's a wild story.
Yeah.
So, by the way, guys, we can see the chat. I saw some people say, can we see the chat or not? Some people are saying Bitcoin 20K or 13K first. I would say probably 13K is more likely right now than 20K with how everything's happening.
Let's just do both. Let's go to 20K, then 13K. No,
I'm up for that.
Yeah.
Give them a little bit of hope and then crush them.
And that would be worst case scenario,
Yeah, but I would rather go to 13 now and then go back to 20 and know that we're going up and not coming back anymore.
Yeah, no, it is what it is. The price is going to do what it's going to do. So for me, like, again, I talked about it earlier. I am sitting on my hands right now a little bit. I'm watching because it's not that it's a no trade zone. I can take day trades, but like until we get a clear, reclaim of ground or further breakdown to levels I'm interested in, I'm just, this isn't a place to just be going in and chatting your balance and your bank account into Bitcoin going, I think this is a low. I saw a tweet, guy said that, it's oversold or, the energy value is super low, whatever it is. Like all indicators are going to give you false signals eventually. Nothing's 100%, like you have to.
Nothing can predict situations like FTX becoming insolvent, right? Having to liquidate a bunch of assets, things like that, right? Events that no chart can predict. And yeah, you can look at the support levels and say, well, yeah, if price breaks down, then we're gonna go head here, and here. But you don't know what's going to be that catalyst event. And we've talked about that a lot, right? We're going sideways. I kept saying, I don't think we're going to go lower unless a big catalyst event happens. Like we're talking about nukes or something from Russia and Ukraine. Little did we know it was a crypto nuke and an exchange was going to go insolvent, right? And which led us to go down.
Who's when we look at this, because I've been through a couple cycles now. Every single cycle, what happens to exchanges outside of Binance, Yeah. Name some exchanges from the last cycle outside of Binance. There's not many. Anymore. There's not many.
Yeah.
So it is one of those things where, again, unregulated market exchanges. If there's one lesson to be learned from anyone, especially in this one, the whole not your keys, not your crypto, but it means don't be putting things on an exchange, especially in unregulated. It's not backed up by like the FDIC or banking, institutions. It's riskier. Like you have to take that into consideration when you're putting money into those 100%. Exchanges. So
yeah,
if you're just leaving it on there, go ahead.
Oh no,
I was
you
just saying,
go.
guys, if you haven't smashed the likes, smash the likes. These guys are bringing you here crazy good information on a day like today, right? Go follow Gareth. Go follow Magic Internet Money. Their links are down below. Go ahead, Gareth. What were you saying?
I was just gonna say and really like study a little of history in the markets, and don't be so focused just purely on crypto, because like you go back to the 1980s, and I'm sure we've all seen the movie Wolf of Wall Street, but basically
Oh yeah,
that to me was like what's going on now in crypto, unregulated, just pump and dumps and this hype and everything like that. And I'm sure there'll be a movie in 20 years about, maybe Bankman Fried, right? I mean, who
yeah.
knows? But then
Jonah
you go
Hill.
to like periods where, and by the way, all of it always shows in bear markets, right? In a bull market, Bernie Madoff would have never been discovered. It was that he was in 2008, 2009 when the markets crashed and people started pulling their money. But then you go to like WorldCom and Enron, and like, I mean, it's just there over and over again. What we see is that these, and you can see my cat crawling around, spooking everyone there. But everyone in these periods, you just have to understand that shady stuff does occur, and it's just more reason to not commit 100% of their capital. I mean, anyone who had all their money in FTX, I mean, you just can't do that. You can't do it in Bitcoin even. You can't put it all in Bitcoin even, because you just don't know the future.
This is what I would say to that as well, guys. So when we always joke, we say we want institutions and regulations so that they'll put some of their net worth into this. It's exactly what he's talking about. That's exactly, they want to diversify and have a portion of crypto, but they're not even willing to do it necessarily unless they get regulations.
Yep.
And so if it's too risky for them to even allocate a few percentage points of their capital, I mean, you got to think about it from your perspective and say, okay, I should broaden my horizons a little bit. Crypto is going to give us some form of freedom, but Gareth covers stocks, things like that, investments. Those are all things you guys should be looking at. Gold, silver. When is it a good time to be holding those? Like the markets are much more broad than crypto. And I started in crypto, and, I'm trying to evolve that over time. The analysis that I do, I know it carries over to stocks. It's just stocks, there's more moving parts in terms of policy, things like that. So that it is not quite as simple as just, just doing the TA sometimes. You do have to pay attention to the Fed, things like that in times like this. But yeah, definitely diversify if you can, if you've got the
100%.
bandwidth.
Diversification is very important. I just want to hit a few chats here. Eric, thank you for the super chat, man. Greatly appreciate it. Says Gareth Cat is shorting in the background. And somebody else said almost every influencer was promoting FTX. Where are they? Crazy. Well, look, you guys need to understand, right? Some influencers, right? They talk about an exchange, right? An affiliate code, yada yada. But right, none of these influencers have the balance sheet books of these exchanges. And almost every single influencer I've seen out there talking about crypto has always said, not your keys, not your coins. Make sure you're pulling off exchanges. Make sure you're getting some hardware wallets, right? So if you're leaving money on exchanges and then the exchange goes under, don't blame the content creator because he was talking about an exchange. The exchanges are good to use, not to keep your money in, right? They're not meant to be your bank. You're meant to be your own bank. That's what crypto is about. So don't get angry at content creators when they recommend an exchange and then you left your money on there, because I hardly ever see anyone ever do anything like that. So
It's true.
Yeah, that's all I gotta say about that.
Yeah, no, very, very true. Do you think they're going to go 25 or 50 in December, Gareth?
Wow, that's a good question. Definitely not 75 after the CPI
I hope
today. But I think maybe I'm leaning towards 25, but I worry that they're all about keeping the pressure on the markets. But I'm telling you, like, and I don't know if so for someone that follows the market and understands the macro, is like these rate hikes, they take 6 to 9 months to filter into the economy. So like the last 3 probably haven't even been felt by the economy. And we're already seeing, Meta's laying off, 11,000. I mean, almost every day you're hearing about companies laying off people. So that's coming. Like, that's just a delayed thing right now. And I worry that they're just overdoing it because they were like proven wrong on transitory. And now they have their ego getting involved in like, well, now we have to, show we're big men over here. And I worry that the economy is going to pay the price.
I agree. I think that if they went 50, that's in line with what they've said they're going to do. I think that's the overwhelming favorite right now is 50. They said they were going to front load rates, and I think we all thought they were kidding. And then when he came out with 475s in a row, we were like, "Oh, that's a little drastic,
They're
man."
not playing a
like,
joke.
Yeah.
But he is correct, though. I mean, they're doing that. They're front loading it because they want that data, I think, in February, so they can take a look at it. But terminal rate, we'll see if we get 4.5%, 5%. I guess closer to 5%. And if that's going to be the top, that's really what's going to come down to. Because I think they'll continue to potentially raise rates. The question is inflation. We're at, what was it like? Was it 6.3 for core? I think is what it was, and it came in under, which is good, but it's still high, so they're going to want to see that number coming down. So I think core inflation on the next run, if it's under that, it would look good. But
just in Magic, just to point this out, because I think a lot of people don't fully understand, even if inflation went to 0, it doesn't mean prices are going back down. It just means they're not going up anymore. They're staying where they are. So I mean, I think when we hear, inflation's down, to this level, it's like, that doesn't mean
prices are coming down.
Yeah, it just means it's staying where it is. And right now, it's still, like you said, it's still rising a year-over-year basis. So I mean, it's a tough place out there, no doubt.
Oh, for sure, dude. I just want to hit another few comments here. Vanessa, look, Ledger, boom, link down below. Buy it only directly off their website, right? Yep. Don't buy it on Amazon. Don't buy it off any third party, right? Oculus wallet, right? These are all hardware wallets. There's Trezor. I don't have a Trezor. I only have these two. Anything that's a hardware wallet, especially these 3 brands I just mentioned, is way better and way cheaper than keeping your money on exchanges and then end up losing your money. So spend $100 and make sure your funds are safe. And somebody else said something about BlockFi. Yes, BlockFi is centralized. I don't know if they've shut down withdrawals or not. They've been having issues for over a year with regulation. So you obviously saw what happened to Celsius. I don't know why people are still keeping their money on these platforms that are promising all these APYs when we've seen multiple times these companies are over leveraged and then they go.
It's just greed. It's the ruiner of all good things.
Yeah, man. And people are sometimes either too lazy or too scared, right, to become their own bank and hold custody of their own token. I'll just leave it on the exchange, thinking that if they mess up, the exchange is going to refund them somehow or give them their money back. It's not a bank, guys. You can't just call them up and say, hey, I sent my crypto to the wrong address. Can you send it back for me? Can you fix that? Hey, I got hacked. Can you give it back to me? None of that happens, right? It's literally in the terms. If they go under, your assets are collateral. They're going to liquidate you so they can pay off their debts. So do not keep any of your assets on any exchange. Don't trust any exchange. Crypto is not about trusting. It's about verifying. So make sure that you don't have any middlemen, right? Also, it's not about middlemen. It's about you and the other person that you want to transact with. Keep everything under your control, under your responsibility, not these exchanges or any other service.
I agree.
But yeah, guys, great conversation tonight. I mean, this is a great conversation. Like always, I appreciate you, Gareth. I appreciate you, Mike. Magic Mike.
There we go. I'll go take it.
For coming on the show, man. Coming on here, spending an entire hour of your day, right, on a Thursday night. I appreciate everybody watching right now. You could be anywhere, but you're here watching, and I appreciate that all of you guys go follow these guys. They've brought you amazing content, like always, on a Thursday night. Go follow them on YouTube. Go follow them on their Twitters. Their links are down below. And guys, like always, question everything, trust nothing, and until next time, hodl like it's hot. See you guys.